Yo, what is up, guys? Today we have an educational style video. I know I've been doing a ton of trade recaps, and that's because we've been killing it with the Legacy Funded Futures Discord. I'm live every single day. Go check that out at 6:45 a.m. Killing it. But let's go into the meat and bones. How am I taking these trades? What do I look for every single day in terms of sweeps, liquidity, and drawn liquidity? Let's get straight into it. So the main topic that we're going to be talking about today is the importance of different kinds of liquidity. So what are the three types of liquidity that we're going to have that we're going to focus on? It's going to be daily, session, and low resistance liquidity. So right here, we're going to go over the sweep of this type of liquidity and then the draw, how it can become a draw. So first things first, on the left side, we have previous daily high / previous daily low. In this instance, we're just going to focus on this as a high. So we have a daily high, we come up, we sweep it, and we have a very aggressive move. Now, what's even the purpose? Like, why are we even going to focus on this? Because at daily highs or lows, but in this instance, again, we're looking at a high, we're going to have a bunch of orders that are sitting up there. And on top of it, when we break that high, people are going to think that we're breaking out. But really, it's going to be a fake. It's going to be a sweep of that liquidity, and it's actually not going to run through there. So whenever we have a sweep of a daily high, it's going to have a very aggressive move, just like this. And the thing is you want to see an immediate reaction. Now, if we come up and we kind of like have another candle and we keep closing above it, then there's a good chance that that sweep might not even work. So we have to have the reaction. That's the main part. And then how can it become a drawn liquidity now? So looking over here on the right side, we have a previous daily low. So when I say previous daily low, that just means it doesn't have to be the previous day. It just has to be one from the past. So it's very broad. It's just a way that we say that term. But PDL is going to be previous daily low. Again, I said daily high right here. It's the same thing. This can be a PDH instead of PDL. So we have a previous daily high, or sorry, previous daily low. We're going to have this manipulation up here, and then it's going to become a target. So that's a very strong target in terms of like what we can expect from it. We can expect, if we have a previous daily low that is very close, we could expect that price is going to run to it right away. Now, second thing, we're going to go into sessions. So we're going to have a sweep of a session high / low, H for high, L for low. So down here, we have the Asia low right here. We come, we sweep it out, we have an immediate reaction. If we were to come down on the lower time frame, we would see some kind of setup where we could get long up here, targeting the highs. And something that I mentioned is when it comes to a sweep, Asia high or low is going to be more effective than London. The reason for this is there's typically more volume or attraction to the Asia range. We're just going to have a lot more orders opposed to London. London is important, of course, but Asia is really the main one. That's where the day starts. That's where the volatility starts. Headed over to the right side. Now we're talking about a draw on liquidity. So Asia can become a draw, or London. And I would say for this one, they're just as effective in terms of the strength of them drawing price down. So you can see right here, we had London, we trade straight through it. And then we also trade straight through Asia. Again, I talked about the sweep of Asia being more effective, whereas Asia as a draw is just as effective. Coming down, here is the final type of liquidity. It's going to be a low resistance liquidity run. And coming back to all of this before I explain all of them, these two, the sweep of a previous daily high / daily low, that's going to be more important than the other two. So this is kind of in chronological order of what's important. So we're the first thing, just like how we go from a higher time frame to a lower time frame, we're going to go from a higher time frame, which is a daily high, daily low, and then we're going to dive lower into sessions, and then we're going to dive lower into just like a normal draw. So this is a low resistance liquidity run, and some people like to call it a like trend line liquidity, which is fine if you want to call it that. It's all the same thing, honestly. But we're not looking at the trend line itself, we're looking at the liquidity. So, the way that like trend line people like to look at this is they would like draw this up all the way to the top and then they'll take the breakout. Where it for us it doesn't really matter. Like this is just going to be a draw. So all of these lows lined up, they're going to attract price because we have a ton of orders beneath them, right? We had all this accumulation right here. Somebody's buying in, buying in, buying in. And once we come down, we're going to liquidate all of these people. And that's what we're looking for. It's best described from a lack of fair value gaps. So the way that you could recognize a low resistance liquidity run is going to be when we have almost no fair value gaps. Sure, we have some like right here, but other than that, like it's just straight lows. Whereas over here, I drew a few fair value gaps out. I could show you multiple fair value gaps in here and how price is respecting them. And this is just a run that we could take targeting this liquidity. Now, the difference between the low resistance liquidity run and the other two is there's no sweep of it that's really effective. Like if we come down and we sweep these lows, it's whatever. It's kind of like negligible. But in terms of it as a draw, it's going to be very effective. Now that I taught you guys kind of the different concepts, let's go on to the charts and see how they actually play out. Now here we're looking at ES, and I'm going to show you guys how stupid effective these different types of liquidity are. Before I continue, I just want to mention that when we have these different concepts we're using, they could kind of overlap. So let's just say that we're aiming for Asia high and then also a high of day. You might have them right next to each other, which makes the setup that much better. But let's get straight into it. So something that I want to point out is right here, we came and we took the previous daily low, PDL, and then this is going to be the previous daily high. Something that you're going to notice within this range is we actually have Asia high and London high that have not been tapped either. So I'm just going to put S and S for session. So what is the first thing that happens? Well, this is 8 p.m. 8 a.m. I do end up trading this day, and I'll show you guys my execution and what I thought. So this was pre-market, and I definitely don't trade pre-market, but you could see that price came down and took this previous daily low, and then it ran straight through these session highs. And then we come up and we sweep the previous daily high. So once we have that sweep of liquidity, you'll notice that we have all these lows that are lining up. And sure, they're not session lows or previous daily lows, whatever. They are a low resistance liquidity run. You can see they're all lined up nice and pretty together. And so that's going to be our draw. And because we had this sweep of the previous daily high, it's going to be a very effective trade where we're having accumulation right here, we're manipulating, and then we're going to distribute back through that accumulation. Let's see what this looks like on the trade that we took live. So I'm over here on the higher time frame, kind of pointing out exactly what I was just describing to you guys, where we came and we swept out that daily high you see up here. And then coming down, I am short right here on this fair value gap. Nice little move, creating more fair value gaps. And what does this look like? We actually zoom out right here. All these lows, all these beautiful lows that are lined up, we trade straight through them. And very effective trade. Again, we're looking for those low resistance lows. These concepts are going to overlap all of the time. Boom. Straight through them. Ultimately, what this is going to allow us to do is create a very strong-minded bias where we could follow this bias. We could have confidence in our setup, knowing that this lower time frame execution is going to end up positively where we want it to go. And this just allows us to have that much more structure compared to someone that just goes off of the chart, goes off of any liquidity. Like, you have to have some structure in your trading if you want to be profitable. Now, this is the next trade I'll be going over. We're going to have two session highs stacked up, beautiful, right next to each other. They're going to act as a very strong draw to our execution, but let's get straight into it. So coming into the day, you could see that we came down and we swept out liquidity. We're also delivering very bullishly off of the higher time frame. Once we come down, we have quite a bit of manipulations right here. And then obviously our main draws are going to be Asia high and London high. And something that I wanted to mention right here is you can see that once we make our target, we're immediately going to come down and kind of not necessarily reject off of it, but we're going to have a small retraction from it. And you could just see how effective and like how meaningful a session high is going to be, how effective it is at actually tracking down that target. And then once we hit it, we're obviously going to have this reaction to it. And we're going to see right here that we have a 5-minute gap, fair value gap. And then if we go to the lower time frames, we have some more fair value gaps that we could enter off of. And the main entry that I had was going to be this inversion right here. Stop at the low, gonna aim for this session liquidity. And that's it. Very simple. We look for the accumulation where we're gonna manipulate at the lows, and then our distribution to those liquidity highs. But if you guys enjoyed the video, make sure you hit the like and subscribe button. I will leave all my links down below where you can find me live. We're also having a 25% off discount code using code Chris on legacy funded futures. But I'll catch you guys in the next one. Peace.